Good morning, ladies and gentlemen. Hello, everyone, and welcome to this live trading webinar. Today is Monday, 12th of December, and I hope everyone had a great weekend so far. So today it's a new trading day, new trading week with new goals. Just remember what I told you at the beginning of December, that usually in December, the markets are getting a bit crazy because of major announcements. They are coming, yearly events, they are about to be reported, and all this stuff, they tend to make the markets a bit crazy this month. Hello, hi Cherry, Jasper, good morning, Raquel, good morning, Dashkan, good morning from snowy London. Wow, I don't hide it from you guys that now currently I'm in Latvia, and I'm looking out of the window, and it is snowing here as well. It's a bit unusual thing for Cypriots to see snow. So it's pretty cool, I can say. I'm sure many of you that you live in countries that you pretty much see snow few months in a year, that it doesn't get you excited that much. Okay, I think it was enough time for the other people to get tuned. So just to make sure, ladies and gentlemen, this webinar, you understand, it's doesn't intend to give any personal or investment advice or personal recommendation. We do market analysis based on the way I see the market, based on technical analysis that it's worthwhile known. If we find some trading opportunities, we acknowledge the risk, and we act based on what we believe it's going to happen next. Nobody knows the answer for the future. So let me share this screen with you. So guys, what's on today's top headline? Today's Monday. I believe we're going to have a lot of events happen in the weekend, and we're going to see them today. So private equity investors remain optimistic. Kohler Capital says interest rate path for US, Europe set to diverge. WTO rules against US tariffs on imported steel and aluminum. Ukraine hits hotel hosting Russian military. Ukraine can win the war, but the cost may be too high for the West. Europe is hit by shortages of antibiotics. Amgen in advanced talks to buy Horizon Therapeutics. FTC's tussle with Microsoft puts spotlight on cloud gaming. Twitter's advertising through Hertz. Binance is trying to calm investors, but its finances remain a mystery. Okay, that's all from one more. Chrysler parents Stellantis to stop operation at Jeep Cherokee factory. So what's the events for today? Based on this calendar here, we have Westpac Consumer Confidence Index, and we have Westpac Consumer Confidence change. We still know the forecast. We don't know the actual outcome yet, because this event, based on this time zone, this event, it's gonna appear tomorrow actually for most of us. Okay, so it shouldn't, in my opinion, it should be a tomorrow's event, but just because it's going to happen at 23:30 ESS time, so that's why they put it here. Next, let's go to the chart. Guys, any pairs you are currently trading now, or anything you spotted on your analysis, if you've done analysis and you would like to share? Yeah, Latvia gets cold. Good morning from snow England. I see few people, they live in snowing countries, huh? Okay, so I will start with the dollar index as usual. We are in this downward move. As we can see, the market just tried to play around here in this short-term term that it's showing us signals to the downside. Then the intermediate trend is also bearish, so it's good for daily traders or for our traders. You guys understand that we have to see three trends when we analyze the market based on the Dow theory and many other theories, Elliott wave theory, and based on the technical analysis rules. The first one, we see the big picture. That's the primary trend in the market. That's the primary. The second, we want to see the intermediate trend. Intermediate trend. And the third, we want to see the near or short-term trend. Now, which one is the primary, the intermediate, and the short-term trend? The primary trend is, we usually see about 9 months to 1 year data. So let's say from, so we are here. So from this point here, it's about 9-10 months. So the primary trend, it looks that it's in an uptrend, okay, because the market from here to there, it's still in an uptrend, the primary trend. The intermediate trend, it's about 1 month to 3 months. Some people, they take it up to 6 months. I just keep it simple, 1 month to 3 months. Okay, 3-4 months, it's enough. So if we start from here, that's let's say September, we see that we are in this downward move. Okay, and then the near term is about 2 weeks, 3 weeks worth of data. That's this area here, this bearish move to the downside. So we have primary trend up, we have intermediate down, and short-term down. So we want to at least confirm 2 trends that they are moving in the same direction and trade in that direction. Okay, that's the best way to approach it. And then we find our catalyst, like either we're going to trade right on support or resistance, or we're going to just wait for some candlestick patterns to appear. So in this occasion, we have short-term and intermediate term to the downside, and that's where we want to focus. Now, if you are trading on the 5-minute chart or the 15-minute chart, you're gonna use something different. Obviously, you're gonna have a primary trend like 3 weeks to 4 weeks. So for the intraday traders, this is a primary trend. Up to a month maximum, it doesn't worth to know what happened in the last 3 months for intraday traders. So up to a month, it's more than enough. And then your intermediate trend, it's going to be a trend that developed, let's say, within a week or 1.5 week maximum. So this is your intermediate trend here. And your short-term trend, it's a trend that developed in the last 2-3 days. So here it's a trend for your short-term analysis to find some execution patterns. All right, so I hope this is clear and you don't get confused when you do your market analysis, because really, guys, that's the first step a technical analyst, a trader that uses technical analysis is taking. So which one is my trend? But depends on your time frame. So if you are an intraday trader, you're going to see the primary trend, intermediate, and short-term trend in a different time horizon. When you are a daily trader, a 4-hour trader, you're going to see it in a different time horizon. Is that clear? I hope that's clear for everyone. So what do we see here? That we are still in this downward move. Market is not just giving us strong bearish candles, but despite this, we still have this bearish implication with lower highs and lower low maintained. We are below some confirmations. There is that 200 moving average is above the current price, so it can act as a ceiling, as a resistance for potential corrections. Then we have, I just move it away so I can show you. Then we can use this trend line here, or to take the very short term, it's this one here. So technically we are still in this downward move. The DAX is still in an uptrend. Okay, some minor bounces here can be held to initiate some long positions. For candlestick patterns, really, I don't see anything that screams out of the charts now. As you already know, and as I'm already explaining you all the time, it's much better if we are be patient and wait for the price to come at the level of support if we want to buy, or at the level of resistance if we want to sell, because that's where are many other orders waiting to be executed. Either they are there as pending orders, or traders are watching these levels to initiate positions. So it's going to be momentum build up from that point onwards. The FTSE, after we sold off from that resistance, the market is just pushing to the downside. So it's a bit, so if we want to say which one is the primary trend in this market here, what would you say based on what we learned today? Do you have a primary trend that it's an uptrend or a downtrend? Most likely it looks like the primary trend is a sideways move. So we know that our primary, the big picture, is just moving sideways. Then from the last couple of months, the intermediate trend, it's in an uptrend, right? So we see this move to the upside. Now, the near-term trend is, if we take, let's say, 1 month, it's still to the upside. So we have a bit big conflict here. And for traders, they're going to short ride this resistance here. They have to understand that there is no trend in the market. So you're just, it doesn't mean it's wrong to do it. There is no right and wrong thing to do in trading. In trading, there is only high probability and low probability setups. That's all. Okay, so the right and wrong thing, I would like to please everyone to take it out of your trading world. There is no such a thing as right and wrong. It's high probability and it's low probability. So if we are shorting this one, we have to understand that this is not in a trending environment that produces high probability trades right now. Dow Jones, although some very short-term traders, intraday traders, they're going to see this as a non-failure swing. It make a higher high, this resistance, and the market make this lower low here, and then we have this bearish engulfing candle here. So for intraday traders, this is very good opportunity in my opinion, because they're gonna go down to the 15-minute charts, they're gonna go down to the 5-minute chart, and they will try to find some zones so they can sell it. That's what it looks like. Okay, but what I see from here, I just see the US dollar that it's still in a downtrend, and it's nothing I will go against it right now and build up positions. I'm going to just, if I'm going to do something, or if you are doing something, just understand what the market is doing in a big scale and act accordingly. On the S&P 500 and on the Nasdaq, really there is nothing here. Let's go to the currencies. I know some people, they were holding some trades on the pound against the US dollar. You have to understand that this is a resistant area. So and sometimes, guys, I said many times, we're not going to have a lot of when we're going to acknowledge an opportunity, and let's say in this market we want to buy, maybe if we are trading only candlestick patterns, maybe the market won't give us that that contrary information to go to the right side and buy with the trend. Like, for example, this one here, that was a bullish engulfing in an uptrend. The market didn't sort off from the 200 moving average. So we had this dodgy candle here, and it's a combination with an inverse hammer that has bullish implication in this short-term downtrend. And then we have this bullish engulfing line here that has bullish implication in a downtrend. Okay, I say downtrend for this very 2-3 bars trend. So that's a good implication that the market can push to the upside. So a buy position can initiate here, and where it's the next level that the market can experience some strong resistance, it's this one here, because we had previously the market double top here and then it sold off. So, and that was the most recent one. That's why this one here, it's the most important resistance level. Can it break? Absolutely, it can break. There is all the resistance and support levels, at some point they break. Okay, so if you are still holding buying positions here, just please make sure you manage your risk accordingly, because around resistance, the prices, we don't say that it doesn't have the strength for a nice breakout. I believe it has it, okay, because of the US dollar weakness. That's all. The same with the euro against the US dollar. Remember, we initiate some positions here. The target, it's right here, so we are just patient to see what the market is going to do. Okay, the market, they don't go up or down in just straight lines. Okay, they do this formation because traders, they buy, then they sell, then they buy again, but the sequence of buying, it's much greater than the sequence of sales. That's why the market's in an uptrend. They have the tendency to move with higher highs and higher lows. So still bullish implication for this pattern here. And now I'm sure you understand, many of you, that if we are trading on the daily charts and 4-hour charts, we see the big picture, what the market is doing, then we see the primary trend, then we see the intermediate trend, and then we use the near-term trend for entry positions. We want to use this move here to buy, for example, or we wanted to use this move here to find some sell opportunity in this downtrend. But it takes some days or weeks for signals to build up or for trades to appear. That's why we need some patience. The USD against the CHF, finally we said it broke below this area of support. The next level is down here, the next technical level. So if we zoom in a bit, we're going to see that the market, it's fighting here at this area. It's giving opportunities, I believe, on the 4-hour chart. You see this one here, it broke, retest, and it can be utilized for some sales. But really, I prefer to see some, I prefer to have some clarity and not this many obstacles if I'm going to initiate some sales. Okay, and as I always said, I want to see green candles before I sell, or I want to see red candles before I buy. Because if you see red candles and you just sell on the red candles, people who saw this one here and they say, okay, now it's confirming that the market is have bearish implication, and they don't wait to see some correction, some retracements. What do? They just sell at a very, very low price. Then it's been 1, 2, 3, 4, 5, 6, 7, 8. Come on. It's been about 20 trading days, a month of paying swaps and paying all these overnight fees to keep up a position, because you weren't patient. For example, of that trader were patient to wait and find better entries. And we do this analysis every day, and I hope that you understand that we just buy or sell from technical levels and not just from everywhere in the charts. Okay. Australian dollar and the Kiwi, we said that they are strong in the market. So this pattern here can experience some break to the upside, although some people they bought right here, some other people they bought right there on this bullish engulfing. On the Kiwi, the same, still bullish implications. Now for end of day traders, for 4-hour chart traders, I don't think there are opportunities here, because the market, it doesn't give that enough space from a technical level to participate. But for the 5-minute chart traders and 15-minute, definitely there are, I believe, many opportunities to take advantage. USD against the Canadian dollar, really, it's just doesn't make sense to me, this pair, because the Canadian dollar, it's very weak. I can see it from other charts as well, not only from here. So US dollar also is weak. That's why we don't see any move the last 4 days. We just see market moving sideways, because both of them, they have their strength and they have the same weakness. Some trades I'm still holding on the euro against the Japanese yen in this downward move. So I'll see what's going to happen. And other currency, Aussie against the CAD, we came right at this resistance. You see the market is respecting this area of resistance. Are we gonna sell? You see, the room of opportunity to trade, it was after the market find some sideways move here, then it just kept going to the upside. So from here, if we bought, then we have to understand that our room of opportunity is up to this area of resistance, because the market at resistance can do anything. It can reverse, it, it can start moving a bit sideways because it reversed this short-term uptrend. So we have to understand where we can make money in trading, considering, of course, the risk and all this stuff. Then in the gold, we have this area of resistance. The market is looks like it's respecting it. What can we do here right now today? I don't see any gold opportunities in this time frame, unless you are selling right the resistance. So crude oil, we are still in this downtrend. We have this lower low. I'm waiting patiently for the market to give some retracement, and then I would like to sell it. Euro against the Canadian dollar, still pushing upwards. And we said that after we broke above these levels here, we were trying to find buying opportunities, and the next room of resistance, it's this one here. Now, does it mean that the market is going to just keep going upwards like this? Of course not. The market can make some retracement and then it can continue. Okay, and that's what we want. We want to see some retracement to allow us to participate in this trend. So far, we don't have any retracement. Pound Oz very messed up here. Oz CHF also messed up. Let me just change it to candle. I think you're more used to candlesticks. Also, this is very messed up. CHF against the JPY, there is nothing here to, that was a support, now we're resistant. On the weekly chart, the major trend, it's up. The intermediate trend, it's a bit sideways. So we don't have any confirmation here to start looking for opportunities. Some sell-offs on the pound, on the euro against the Kiwi. Remember, we talked about when the price came, that's the 4-hour chart. When the price made this lower low, we said that we are keeping an eye on this area, and I hope you took some opportunities, some trades here, because that's what we want to trade as technical trader, guys. We want to see lower highs and lower lows, and we want to find either strong levels of resistance or strong price actions. Candlestick patterns, combination of candlestick patterns at this resistance indicates that new sales can enter, so we can just sell, and that's all was all about with this euro against the Kiwi. Okay, now we're gonna wait. We are right at this move. If we sell now, where it's going to be our stop loss and where it's going to be our next target. The next area of a strong support, from what I see, it's down here because of this interaction, but really the next area, I believe, it's this one here. Not this one here, but this one. That's what I believe. There is fairly there is a fairly amount of distance the price has to travel to come and retest this one. What do we do here? We are waiting for a new opportunity to sell it again. Okay. The end gas, it was the opportunity right here at the bottom. Some people, I don't know, I didn't do anything to buy this because it's sideways market, but I don't know if you guys jumped on here and you bought it. Some people from the YouTube, I think it was Rumen, asked about this one. I don't remember. So that was 50 points. Now it's 96. It's almost 2-1. Pound against the yen, it's just moving sideways. There is no clear direction. Pound Aussie against the Kiwi. We said about this. We were waiting actually here for some buying opportunities that never came. Sorry, for some sell opportunities after a buying push to the upside that never came. New Zealand against the Canadian dollar. We had this move to the upside, so not a single two candle retracement at least to give us opportunity to participate. Sometimes the markets, they just sold or they just bought so crazy that it doesn't allow us to participate. So that's all for today, guys. I don't see anything happening beside all this. So I don't see any. How about CAD yen? Let's have a look at the CAD yen. I see it here. CAD JPY. CAD yen, it's pretty much the same like the Swiss yen. So we find that the primary trend, it's an uptrend. You can see it from here. Primary trend is an uptrend. Then intermediate trend, about 3-4 months data, it's a very sideways here. So the strong trend is upwards, primary is the intermediate is sideways, and the short-term trend, it's just doing this downward move. So we have three trends that none of it confirmed, none of them. So I don't see any catalyst here. Now, again, if you guys are seeing this as a descending triangle, yes, definitely it has the implication to move to the downside. All right, so we're gonna wait. I think it's still too early to say about this descending triangle that it's gonna push here. We're gonna see the break either from here or to place some early bets, let's say, with low risk. We need to see some rejection around this, either this level, this inside level here or here. You see, it's very, you can build up 4 different scenarios, 5 different scenarios about this market. But on the contrary, if you see, let's say, this market here, the Aussie against the Canadian dollar, remember when we built up our trading plan and we acknowledged that the market it broke outside of this resistance, and we said that we want to buy. We found this area of retracement, and we start buying those. They bought it. Okay, so that's simple understanding. It's not, you can't build 100 different scenarios around this move because it's crystal clear. The market has a clear direction, a crystal clear breakout, and then you are looking only for one activity to buy. The market then came and done this thing here, and we're saying, okay, we are looking to buy again. It gave only one candle, it just exploded. Then here we said, we didn't say we want to sell, we hold well above this support. So we said we want to buy. And that was the only option. You guys understand how it's better to find markets that they have clear trend, and then we trade these markets. Okay, guys, I think time is over for today. I hope you understand a lot of things. I'm happy that I see many people, they are holding nice trades. Well done, Rumen, and all of you that you took good trades. Good trade, it doesn't mean it's a winning trade. Good trade means there is a valid reason to take that trade. Okay, that's all. So I wish you to have a nice day, the rest of the day, and I look forward to see you again tomorrow at the same time. Thank you so much. Bye-bye.